Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We have an unbelievable panel. Starting off with me, I'm the host, Harvey Freed. Alongside me, the co-host, Harry Glanz.
Oh, you're unbelievable. Okay, good morning, everybody. Good morning, Harvey. Good morning, John. Good morning, Nancy. How's everybody doing today?
Fantastic. Good to see you, Harry. What's shaking?
Hey, man, I got to tell you something. Real estate's really hot. I'm glad we have Nancy in here. She's going to tell us all about the market, what's going on currently. Everybody knows how strong it is. But, you know, there are a lot of little nuances because each transaction, as we all know, is specific to that buyer and seller, Harvey. So why don't you introduce our panel?
Well, introduce the whole thing. We got John Kolb, of course, from our office, top 1% of all originators, one of those Scotsman Guides, top originators in the United States, and Nancy Warson from Real Estate One out in the West Bloomfield office, handling all of Southeast Michigan. She's a lake expert. We're already diving in. We're talking, they had a flood insurance commercial. So we're talking about waters and lakes and canals. We're going to get right into it. 248-539-9797, Harry. Yep, the market is hot, hot, hot. No doubt about that.
Yeah, so, you know, I heard that flood insurance commercial, and you and Nancy are lake experts. Also, John, I'm gonna go ahead and I'm gonna bust John on this. He's a lake expert up north. He's our up north expert. But what people don't realize, when you live on a lake, I know it's fun, sun, and, you know, guns out, sun's out, guns out, whatever that saying is. You know, Nancy's
sun's out, guns out.
Yeah, right, whatever.
Wow.
You know, but insurance is so important because things can happen. And when I hear that a house is in a flood zone and people don't want to pay for flood insurance, why do I think, you know what, maybe they're crazy for not buying flood insurance? I mean, it's mandated. You have to do it. And if something happens, if that water backs up or there's a storm or, hey, the 500-year flood that comes every 2-3 years,
right?
You know, your house is covered, John. Am I wrong on that? Nancy, am I wrong?
No, you're not wrong, but, you know, I feel like there's so much insurance for everything. I'm just, you know, insuranced out. And what about an umbrella policy? Like Harvey was saying, why not just increase your umbrella policy? It might actually be a cheaper way to go.
I think that's wonderful, and that's why each transaction is specific to that buyer and seller, Nancy. And we were talking, you know, pre-show, is that everybody has a philosophy on how, because it's so easy now to sell a house. That's, I'm put air quotes on that. Everybody thinks it's so easy on that, and it's really not. But there is a strategy and philosophy, and sometimes it works out for people, and sometimes it doesn't, right?
That's correct. Oftentimes, you know, somebody who hasn't sold a home in a long time, they will, you know, try to say, well, you know, let's try the price here. And we'll be a little bit higher than what the market's actually calling for right now, but we can drop it. We can always drop the price. Well, in this market, it's almost like the kiss of death. We can't do that. We almost have to price it where it's fair or maybe just a little bit below and see how high it goes. Supply and demand is really what's driving our market right now.
I'd like to, you also see still 22% of all offers. You're starting to see some cash offers, although it's dropped a little bit. But right, you're driving up that sales price. It's a different strategy than it was years ago.
Correct.
You know, and again, you got to sit down with these families and figure it all out. But it's a lot easier to raise the price and keep taking higher offers and get more excitement, generate more buyers, and then maybe get that opportunity with a cash buyer, and you get closer to that crazy number that you're looking for. You mentioned this before, John. We also run into this on the appraisal side. I don't want to jinx it because I've been lucky, really lucky lately. And
Yeah,
appraisals,
you guys have been coming in my office.
I haven't been there arguing about appraisals.
Right?
Yeah, I'm literally coming in, and hey, look, the comps are there. It's definitely gone up in value, and not always the comps are. Harry's shaking his head, but John, definitely getting those appraised values really make it easier for the buyers to get, you know, again, get that deal closed.
Well, all the more reason why you need to work with a professional like Nancy, because you see those ins and outs of what the market's doing and the changes, and they have to adapt quickly because you just don't learn overnight. You know, this comes from years and years and years of experience. But like you said, Harvey, yes, we're very lucky right now. Appraisals are starting to come in, but we have seen some appraisals that have come a little bit short. I mean, Nancy and I have seen that, you know, together, unfortunately, on a couple of transactions. But we have a great process at Capital Mortgage Funding in trying to rebut the appraisal if there's warranted data. And, you know, I would say we're a 50% success rate when it comes to that, when we have successful data and data that is validated. To come back and get the value a little bit higher if the first appraisal said, no, we don't agree with the value. Now, you know, I have had some that have not come back, but that's because the house was slightly overpriced or that they went in with an appraisal guarantee over listing price. And like Nancy said, they were listing it right at a fair value and or slightly under, and that's where those appraisals came in.
It was the competition that drove it up.
Right. Yep.
Yeah, don't you think, Nancy, that when you're talking to your prospective listener and you go ahead and you tell them, listen, here's what the neighborhood is getting. And then they tell you, well, I want more, I want more, I want more. But first of all, who doesn't want more?
Right.
Second of all, when you have that conversation, the frank conversation, listen, here are the comps, here's what's sold. Even if you get a buyer and they have to get a mortgage, the property might not appraise. Take me from that, ... You ready? Property might not appraise.
So the property might not appraise. What are the chances that you're going to have? What are the chances that you're going to have somebody that's going to pay cash? What are the chances that you're going to have more people that are going to have to get a mortgage? Well, we have to consider that appraisal. Unless you want to bring more money to the closing table or you want to somehow evaluate your mortgage, and you can all of a sudden miraculously get approved for more, then we have to take that into consideration. And basically it's strategy.
Let me say this about that buyer though. In that price range, and I'm noticing it a little bit more. Usually 5, 6, 7. Let's just go 600 and above. Those buyers are typically second-time buyers. I'm not really a first-time buyer in that price range. And I have noticed, of course, we see 22% still on the cash side. They'll dip into their 401ks. They will use the funds from the sale of their house. And of course, they have so much equity from that sale. And if they really want that house, they're willing to pay a little extra for it. And we've seen these crazy offers. Harry's involved with one now. It used to be 5 to 10 or 15,000 over. The over asking price now is $40,000 to $70,000. It's not even something odd. It's really the norm lately.
That's correct.
But what Harry's saying, and what's the strategy behind it, and what Nancy does is comes back to us, pushes it back on me, right, and says, okay, John, here's where we see all the comps. Here's what they're going to submit an offer. Give them the worst case scenario. Play devil's advocate, right? So that they are prepared, so that they know. And guess what? If it comes in 10 grand higher than the listing, 20 grand higher than the listing, or for what they're asking or put the offer in on, then everybody's happy. But at least they were prepped.
But I think more than ever that, Nancy and, her fellow realtors are having those frank conversations with people, because this is no market to soft sell, any puffery going on,
right?
And beefing somebody up and, yes, when you really have to talk frank with somebody and say, hey, listen, here are all the options. Here's what could happen. Let's be prepared for everything, right? So if you're prepared for everything, there are no surprises, right, Harvey? It's like playing first base. You get the perfect throw from the shortstop.
Get handcuffed.
Great, but you got to be prepared for digging that one out of the dirt, don't
There you go. You can get handcuffed on anything, Harry, but being prepared for anything. And again, a little reach out to the first-time home buyers. We're doing more one-on-one meetings and having better conversations. Becky from our office talks about this always, starting these great conversations off and really getting that confidence level up of the buyers. Again, tough market still. This inventory is really dictating what's going on out there. And they're just not going to be dropping another couple $1,000 homes here in Southeast Michigan or anywhere in the United States.
The prices are not dropping. I don't anticipate that the prices are going to drop even in the year to come. Supply and demand is still our what's driving our market, and the competition is still there. The buyers are still there. Sellers are, it seems to be that the sellers are a situational type seller. Some sort of life event has happened, and then they're then causing the listing. But the buyers are still there. They want to buy. And the millennials, they're large and in charge.
Yeah, they're out there. And John had a great guest. So we like to take a little bit of a national perspective. We had a great guest on our podcast this Wednesday, and she was from New York, New Jersey area, really, the New York City metropolitan area. And we asked her the same thing because, see, we're here in our area, and we just think what's going on here is that's it. And she said, are you kidding me? No, supply and demand, houses aren't coming on the market, prices are going up. She's working harder than she ever has, her and her team, because she has to be prepared for her selling clients and her buy clients. So she's working both sides of transactions. And she said, quite frankly, it's not going to end soon. No. And the millennials are in charge because, let's face it, after the baby boomers, they're the second highest population because baby boomers had kids and they're called millennials. So, they're spending a lot of money.
They can. Yeah, they can afford it. They have the education, and they spent a lot of time in the basement. So, just kidding.
I mean,
That's a John line.
that's why we get along. No, but they do. You're right. They have a lot of money. They've saved up. They have a family that seem to be backing them, and doing it the right way, we can get those family members the money back. 2 weeks, 3 weeks after they close on the cash purchase, if that's what they do. But you need to be advised on the best way to do it. Just don't go pay cash and then think that you can turn around and get the money right back. There's a process to it, and I'm not going to give all our secrets and trades.
There are rules.
Right.
There are rules
that we go through to make sure that it's done the right way. A lot of extra work for us, but we don't charge extra for it. It's just part of the process of making sure that we take care of our clients.
I don't know if I want to dive back into the inventory, but definitely, National Association of Real Estate, of course, they're always throwing out where the market's going to go. But there's no doubt home prices are influenced by this inventory brought to the marketplace. It's pretty simple. Increased home billing might tame that price, but there's no way they're going to be able to build that many single-family homes. They're not building them at $200 to $350 anyways. If they're building them, they're starting at $500,000 in most situations. Limited construction will continue to make home appreciation, and we're the shining star here in the Midwest. The only place the indicators has shown the price housing index has shown that they've dropped a little bit is really in those crazy out west areas, San Francisco and those areas, higher priced areas. We've seen a little bit of depreciation. Just the prices have fallen off a little bit. But again, if that house is in moving condition, I don't care if it's $2 or $3 million in California, they've got buyers for them.
Because I think a lot of the buyers these days are the people that want something that they can move into. They're business professionals. They have kids already. They have, a family, and they're the ones that are going to hire stuff out. They are not going to be the ones that are like, let's swing a hammer and start, rebuilding this house. Right. So that's why those sell first.
Guess what, guys? That music says we're up against our first break. We are taking all your calls this morning, 248-539-9797. We're going to talk mortgages and real estate. Keep it here. We'll be right back. Fortune.
Small fortune.
Alrighty, we are back. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can find us.
Why do I still get bummed out when the Tigers lose 8-0?
I did too. I walked in with that.
Why do I?
You do. Well, because we care.
Too many expectations.
We will take your calls here. 248-539-9797. Nancy Warson from Real Estate One joins us. Always talking about today's current marketplace and maybe some other places. John Kolb's in the studio here. He'll always talk about up north. John, you're like going back and forth. He'll give us a construction update on the roads up there, getting back from up north. What?
Traffic update by
Traffic
John
update.
Cole.
Yeah.
I mean,
Traffic
hey,
brought to
there's
you
Traffic
by-
brought to you by.
You cannot give an update on traffic. The barrels seem to come and go overnight. It's amazing what happens. I mean, even just around here, you can't go south on 3 different roads: Coolidge, Greenfield, and
Orchard Lake Road, where I'm at.
and Woodward. Right?
Yeah.
So it depends on. I mean, 75 is going to be always under construction, down to 1 lane. Who knows?
There are people on 75 right now listening, hopefully, and they're going through that. But see, it's what we do. It's what we where we drive to.
Fix
We've
the
done
damn
it for
roads,
years.
Harry.
Yeah.
Fix the damn roads.
Listen, this isn't a political show, but I'll tell you, people are sitting out in traffic right now because they're going up north. They're going to enjoy the weather today. It's going to be beautiful out today. So, we live for these moments around here. This is what we have. And that's why I get so bummed out about Tiger baseball.
Right.
This is what we have.
What's going to happen in the fall when you start drinking the blue Kool-Aid?
Already started.
That's a different show for a different time, brother.
All right, there's
That's a
always
different
hope
show.
for these crazy mortgage interest rates, but interest rates on all ends, whether it be a home equity loan, all interest rates, car loans, these are the highest interest rates we've seen in 2 decades. So it's definitely taken a bite out of a lot of people's savings. Is there going to be a recovery? We're going to see it eventually. There'll be some form of a recovery. But Harry, we got the feeling there were a lot of, quote, experts in the mortgage world saying that it was going to be at the end of 2023, the summer, that these mortgage rates were coming down. Harry, we're not seeing that.
Yeah, let's go right here, and I have Nancy here as a witness to this. Okay, we said it 2 weeks ago, and John will remember that we said that the Fed was going to raise a quarter. We said this, and we've been telling people that they're going to raise for a very, very long time. So, Nancy, what does it really mean in the real world for home buying that rates might go up a little bit? I said, and this is my statement, it's nothing, because there are buyers out there, right? Nothing is going to happen to the buyers, whether they pay 6.5, 7, 7.5. The buyer's going to be out there because there's a shortage of homes, and people always have to have a place to live. Look at in the early 80s, which I remember, and you guys weren't alive, rates were at 17, 18%. John, they didn't know about rates, Nancy, back then. But people were still buying homes. So when we say what's going to happen, nothing's going to happen. People are still going to buy homes.
That's absolutely right. I completely agree with you. Nothing's going to happen. When the rates were, going up, exponentially, maybe last year, people were, whoa, hang on a minute. But now it doesn't really matter.
Because the market settled in.
They
Everybody is settled in.
And they have to move. They can't necessarily hold up their lives because of 0.5%.
Let's talk about what happens if the person did wait last year, right? So they waited because they wanted rates to come down. And that $300,000 house that they wanted last year is worth how much now, Nancy?
$325, $330, whatever.
Right. So now the increase in the price, the increase in now your mortgage amount that you need is offset because even if the interest rates had come down, it's offset because the payments are going to still be the same.
Yeah, plain language is they lost money.
They lost. They could have
money.
won. They could have bought the house at the lower price, and when the rates come down, then you refinance and get the lower rate. Then you've secured the price in your mortgage, and now you can adjust with your rate as it comes and goes. And that's just part of the game. You got to be part of it. And all those, what do we like to call them? The backseat experts. Backseat experts, I should say. They just don't know what they're talking about. And there's theories behind this and models that they put out, and you got to just sit down and listen. And you have to reach out and listen to the experts. Don't call me if you don't want to hear what I have to say.
So if you waited, let's just say, and use Nancy's example, let's say the house is going to cost somebody $30,000 more, and they waited 2 years they paid $2,000 more a month in rent for 24 months. That's $48,000 plus the $30,000 that they're going to pay. Do the math.
Yep.
That's a lot of money. That's
what at 6%. That's every 10,000 is what, $65 a month, Harvey, something like that. So that's $195 a month plus your $2,000. So you're talking about $2,200 a month that you lost.
times 24 months plus the $30,000 that they're going to pay more for the house. So waiting in this market is not a good strategy. So we're telling people that. But again, I have to play both sides. If you're not ready to buy a house, if you don't have the money to buy a house, if you can't afford to buy a house, if your credit dictates that you need your credit, then don't. But if all things being equal and you were in the market, Nancy, if they jumped out of the market and they're trying to get back in, it's going to be harder to get back in the market because they're so far behind everybody else that stayed with it, right?
It's very true. And, to your point, the right timing is your timing, but if you waited just because you think you have a crystal ball, obviously none of us do. So probably buying right now would be better if you can. I've had buyers that tried to buy last year and they're no, I just don't think it's my time. Oh, I think maybe, I'll wait for, after the wedding. And now they're sorry that they didn't go ahead and buy that house because they're getting priced out of the houses that they are now trying to purchase together.
It truly has been the case for all of those buyers. The people that got out last year, they're kicking themselves a little bit saying, wait a minute here, the rates didn't get any better and the prices went up. So it's pretty simple stuff. Supply and demand continues. But let's get those first-time home buyers out there considering buying a home. Well, yeah, you should, because of course we always talk about it. Renting is 100% interest. You're not going to build any equity that way. And then we broke it down, and I spoke with Dan in our office yesterday. He's got a couple rentals in Royal Oak. He's collecting, and most landlords are, even for the houses that they rent out, it's 1.5 times the rent. So again, it might be a nice house in Royal Oak, $2,000. Now you're at maybe $3,000 out of pocket there. First month rent, you're about $4,000 or $5,000 easily invested just becoming a renter. So coupled with the Mishta loan, which is unbelievable, and many other down payment assistance program, we have the National Faith Down Payment Assistance Program. The city of Warren offers ones. Most of the cities have programs. Of course, St. Clair County does, Port Huron does. Becky Haley's doing them in Detroit. She got someone from our office. She got Detroit families. If you're currently renting in Detroit and want to purchase in Detroit, and you take the class, you fit the criteria, and it's pretty easy, $25,000. So these are crazy opportunities out there that they never even had before. And again, I don't even know why they have them. The government has released a lot of money to cities, and now they're helping some first-time home buyers. Get off of that stool. You got to get in there and see how home ownership is going to affect you. John, one-on-one meetings, I'm doing more and more of them again.
Yeah, people want to sit down and meet you face-to-face, which is great to see. We have plenty of office space in our office for our conference rooms in our office to sit down and go over with everybody. And feel free. We love it.
Yeah.
Let's get to know you face to face. Let's get your needs and your wants on paper, and let's do it the old school way, because that's the way that has always been successful. It's
huge when we sit down with someone, we start going over everything. We talk about their debt to income ratio. We start talking about credit and things they can do to burp up their credit score a little bit and get those credit scores out of the 600s into the 700s, or if you're in the 500s, get yourself into the 600s. Now you're making yourself an opportunity to make yourself a buyer in today's market.
There's something to be said about sitting down and seeing your credit report face to face, right? I can tell you till I'm blue in the face over the phone, but it's falling on deaf ears a lot of the time. You gotta get your balances on your credit cards below the limits, a certain percentage, so that it's actually helping your credit versus hurting your credit. And seeing those numbers on the credit report, so we can circle, highlight whatever we need to do, push it in front of you, and push your face down and say, hey, this is what you need to do.
But
start listening to us.
Sometimes there are surprises that come out with credit reports. I mean, you could have somebody that has the best credit, and all of a sudden there's a medical collection account on there because they thought that their insurance company was going to reimburse them. So then we go ahead and we instruct people on how to go ahead and make those moves, make those calls, who to contact to try and get that medical collection. And if you fight it with your insurance company, they're going to throw it on there anyways. So it doesn't wreck your credit score. It won't wreck your credit on that instance, but John said, if you see it in front of you that this company threw a medical collection on you, you're going to address it right away.
Yeah, and I got to tell you, I had this conversation on Thursday with somebody that said, medical collections don't hurt your credit anymore. I call BS on that.
Yeah, I know. I agree with you on that. They do.
It's such a sham. They say that. They're just like the foreclosure a moratorium during COVID. Okay, sure.
Right.
They tell you that, but that's not really what happened.
They still marked you late.
Right. So your credit report does get affected when you have a medical collection, okay? You can dispute it, and it may cause the score to go back up. But then if it's disputed, you still have to undispute it before we get something done on a mortgage. So get it taken care of. Sit down in advance. I always tell a story to clients. I had a long-term friend who was looking at a house in January. We pulled his credit. He had an $84 medical collection on there. I told him, I said, get that taken care of, because your score's at below 700 just for that one little thing, and you're starting to look for a home. Give it some time to rebound. Come August that same year, he found a house he had to have. He loved it.
Yeah.
Pulled his credit, never took care of it.
Oh, boy.
And I said, okay, well, and he's like, well, I'm going to take care of it right now. Well, you didn't have enough time for your credit to rebound now. You should have listened to me 8 months ago.
Yeah, the point is that it might hit your score. It might not prohibit you from getting a loan.
Oh, no, it's not going to prohibit you from getting the loan, but it's not going to put you in the top tier of rates and costs.
Right.
You want to be in that top tier. That's where you're going to have your most options and your best bets.
Still getting a lot of calls. I actually took a call this week on a client who had that issue with a non-conforming loan, a subprime loan back in the days of 2008, 9, and 10. And again, not handling it properly, not getting attorneys involved. Folks, if you've got stuff going on your credit, you want to become a homeowner, you're thinking about taking some equity out of your home and you haven't had a mortgage in a while, get in touch with us, Capital Mortgage Funding, 1-800-LOW-RATE. What we'll do is sit down and break down all those numbers. Home prices are on a tear again. So if you want to release that equity in your house, maybe you needed to consolidate some debt, maybe you needed to pay off someone that helped you get into that house, definitely give us a call at the office, 1-800-LOW-RATE, the best mortgage banker. Home prices are on the rise. We're seeing it here in Southeast Michigan. Nancy, what other trends are you seeing here? Are we back to the multiple bids and escalation clauses? Is that going on as we're getting towards the end of the summer? What are you seeing with your buyers? How do they get that offer accepted, or is it just all about highest and best?
I think it's about communication with the listing agent. And oftentimes I'm, been in the business so long that I know a lot of these other agents. And, some will tell you what's going on, what you need to do, and some won't. But I think the only difference is that there aren't 20 offers. There's 4.
Okay.
But escalation clauses if necessary, appraisal guarantees if necessary, anything to have the seller have more money in their
If
pocket.
there's only 4 on the table, you're always in the game, right?
Yeah,
Versus 20, they take the top, top 5 and throw the rest out and don't even reconsider them. If you've got 4 on the table, then you're always in the game, and you have to listen to your agent and listen to your agent who is speaking to the listing agent about what you need to do to make your offer more viable. And that's something that Nancy does on a regular basis. She just cozies up to that listing agent or buyer's agent, whatever side she's working on, and makes a transaction work. And that's the best way to do it, is working together. We always say that. Work together with your team.
And Nancy, we're going away.
Hey, you know what? Let's
take
go
us
to a
the
quick break. We are
Harvey, thanks for the heads up.
Hey, man, we just bring it to you. 928 here in Southeast Michigan. It's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We're live here in the studio, 97.1 studio. That's where you give us a call, 248-539-9797. We'll be back. Hey, we are back. 248-539-9797. It's the Hardcore Mortgage Real Estate Business Show. In our 23rd plus year. We'll be 24 years starting, I think, this fall or winter. Anyways, always bringing you great information about mortgages and real estate and today's competitive market. Again, if you're a first-time home buyer, definitely give us a call at Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. We'll get you set up with all these down payment assistance programs. We'll show you how to break things down. There's families giving gifts. We'll show you how to break down the gift. Again, John Colby started talking about credit. It's so fun when you get those buyers and you sort of take them from, today's market in a couple months. And I got the offers accepted and everything just starts flowing. You get the good inspection done. There's some negotiations there sometimes. So, John, A to Z on mortgages and real estate, we make it fun.
We make it fun. We try to make it as easy as possible. The job is not easy. If you're going to transfer money back and forth between 5 different accounts to, every month, and then all of a sudden you think you can just hand us one bank statement and one pay stub and you're closed. Unfortunately, that's just not the way it goes. Tracking assets is the hardest part of our job, in my opinion. Employment's easy. Income's usually pretty easy unless you're self-employed with 72K1s and different businesses that take a loss and take a gain. But, assets I find are usually the hardest thing because people do like to move their money around, and they should. They should be able to, put it where they want and also, pull it out when they need to. So that sounded a little.
Yeah, and that's it, John. But from the perspective of somebody's buying a house, and even if they put 20% down, right? That means that we're the 80% partner, they're the 20% partner, and they get to live in it for how many ever years that they live in it. So if we have to ask somebody, and I'll be the bad guy here, if we have to ask somebody, why did you move this money to this account and this money to move this account, and we need a documentation and a paper trail, you know what? Just get it for us, and it's all good. That's all we're asking. We don't want to put anybody through anything that they don't have to go through because we don't want to go through it. So it is not a paint-by-number situation. Everything's individual, but we have to see. That's the most important part of the transaction. Where is the money coming from? And by the way, how long's it been there?
Right. I don't want to see your cryptocurrency accounts. I don't want to see your Robinhood accounts because, getting real statements out of those type of companies is really hard. I understand the value that they offer to a client and the ability to invest quickly and easily, but it's not the easiest thing to document money in and out of when it comes to mortgages.
Yeah. So, Nancy, one of the best parts of our job, your job, our job, it's the same kind of thing as when you're sitting at a closing table and you've worked with a buyer that you've shown how many houses to and had how many offers rejected, and they wanted to get out of the market, but you said, hey, stay in it. We'll find something. And after 23 properties, finally, and 6-7 months later, we're going to have a closing. I mean, it's just gratifying. Even doing this as long as we've been doing it, over 35 years in that range. All right, when you're sitting at that closing table and you see that person and how happy they are when they bought that house after, especially in this market. Harvey's going to closing, John goes, I go, we all go to them. It's a lot of fun, and they're just happy, right? They're happy.
They're happy, and, the relationship doesn't stop there. We follow up with, hey, how's it going? Hey, did you make your first payment? Hey, do you know what you're doing? Have you set up your automatic payments? Have you,
Did you file your homestead forms?
Did you file your homestead forms? Good call. Occupancy, keys, that often follows the closing too. So the relationship doesn't stop there, and it continues on for years and years and years because they have family members, they have friends.
Well, and they know who to call.
And they know who to call
you because you took care of it and you hooked it up.
All right, guys, I had a great closing. I'll just drop it because it's a real life situation. Sure enough, I saw the agent in the morning. He's like, oh, man, Harvey, this was the worst walkthrough I've ever done. I'm like, what do you mean? He goes, oh, things they talked about verbally, not putting things down in writing. Well, sure enough, the grass wasn't cut. It was supposed to be because they said so. Mm-hmm. And all of a sudden, the floor thermostat to heat the floors here in Michigan, we got heated floors, of course. It was tripping. It was broken. So last minute situation. We saw some negotiations, and sure enough, you see sometimes sellers and buyers outside of closing saying, here's a couple $100. I didn't get that fixed as I promised you, and here we are at the walkthrough already. So again, having cooler heads, having educated people, the real estate agents involved, the inspectors, giving the confidence to the buyer that, hey, you're doing the right thing and these are fixable items, because we always talk about inspections and the quality of the house. But again, nice walkthroughs are nice to have. Maybe do it 2 days before the closing versus that morning.
Yeah, exactly. And even though we are not attorneys and we don't pretend to be, we sometimes have to know how to fizzle a possible confrontation
There you go.
between
Yeah.
buyers and sellers.
Pour some water
that's
on
what
that
we're
fire.
there for. Yeah, that's what we're there for.
Well, cooler heads will prevail, right? And doing the right thing is always going to get you, the best outcome.
Yep, that's true.
Words of wisdom by John Culp.
Hey, let's have Becky Ellie join us. Becky's calling in, of course. Happy birthday to the girl. We lost her. She'll call back. That's okay. Good job over there, Dust. All right, he'll get it all figured out for us. 248-539-9797. Becky Ellie be joining us a little bit. Hey, these homeowners, when they were buying at 3% and 4% interest rates, that was amazing. They were like, wow, I've got a lot of buying power. Well, now with the higher interest rates, it's almost taking prospective buyers today that are looking at paying like 36% of their monthly income. So, yeah, it does take a little bit of bite out of you. Maybe you lost a little bit of buying power with the higher interest rates. So, again, sit back down with your lenders. Again, don't deal with out-of-state lenders. Keep it here locally where you can reach out to people and get quick answers. And one of the most important things, we're going to go to you, Becky. One of the most important things, too, is this communication. You brought it up. We are calling the listing agents when offers are made. We're reaching out. Nancy, if you got an offer you're putting, I want to know that my pre-approved buyer, I'm going to call that listing agent and say, hey, just what you're looking for. We've run it through, give you that added confidence, and we can get this closed in 30 days. That's what they want to hear to get these offers accepted.
Yeah, that's absolutely true. And I feel like a lot of times right now, the buyers were trying to just get something. And they're like, when we were in the 3% market. And now they're being a little bit more, picky about things.
Sure.
And they're also, oh, wait, I got this house. This is great. However, now I don't like this about this.
Uh-oh.
Yeah.
Right. They're coming up with the things after they've already had the offer accepted, negotiated, and like, oh, well, I don't like the sprinkler system and, the pool. And this is what you were looking for the whole time. All of a sudden, now you changed your mind?
Have those conversations ahead of time. Hey, Becky Ellie, I hear the noise in the background. You're joining us. What's going on?
I think it's a great point, Becky, and I really do believe in the communication. And, we talk about things. There are people out there doing real work, and, we like to say how experienced we are. But if you're really experienced, but you're not doing the work and you're not in the market, you don't know what's going on, what does that really mean? And if you've only been in it 2 or 3 years, but you're out there, you're working, you're in touch with the market, that's what counts. Who's doing the work now? So we feel that with the communication, with how active we are in it, we're in it every day, that, we get things worked out. All right. I have a saying, Harvey hates me when I say it. All good loans close. All good loans are going to close. We've never had a good loan that didn't close. So we have to start there and work backwards. We know it's going to close. Show us the funds. Get everything in order, and the transaction will close because they always do. But, Becky, that's right. Set the expectations up front. Have the tough conversations up front. So by the time you get to the closing table, everything is really, really smooth.
Becky, I don't know how much down payment assistance the city of Detroit still has left, but, I was excited. I know you've been working these programs. You had a closing this week where the buyers got $25,000. Just give us a little bit of background on how that goes down. Hey, Becky, homeowner. Let me go there too, Becky. Hey, home ownership. This isn't like we're getting them in again. I don't want to say the Detroit Land Bank if I said that out loud, but they were giving away these houses, 5 or 10,000. Come on down and sign your name. The problem is those families were stuck with houses that needed roofs. They needed sewer systems. A lot of them are living without insurance on these homes. I've been talking to a lot of families that aren't doing the right thing. So definitely getting in touch with us. These houses we're talking about, these are appraised. They're inspected. They meet the qualifications. These are generally in moving condition houses. Yeah, they're going to need some loving, but you can fix it up and make it your own home. Hey, Beck, stay on the line here. We're going to go off to a call. If we can bring that caller up, we're getting there. We're going to bring that caller up in a second here. Let's go to, can you bring him up? Let's go, Dust. He's going to wait a minute here. We're going to go to Chris here in a minute as soon as Dustin brings him up. 248-539-9797. Again, not only is it a house that we get you into, but is it going to be something you can afford? Is it not going to be a money pit? Are you doing the right thing for your family? Dust, you ready for that call? Let's bring him on. Good morning, Chris from Port Huron. Go ahead. Yeah, I like that. Domino effect, definitely. You're a real estate agent, I'm guessing, Chris.
Excellent. So how are you finding? Yeah, how are you finding the market right now in your business? You finding homes, identifying homes, fixing them up, and are they moving for you? Right. So if you sell at the high, that's excellent. That is, people don't understand that if they sell at a price that's high, they're going to end up, if they're moving, then they're going to buy at a higher price. But it all works out. And like you said, generally if you push it back a day, I know it can get aggravating, but it's going to close. And sometimes there are things, there are a lot of people involved, a lot of moving parts. Sometimes, somebody sticks that popsicle stick in the spokes and it prevents it from closing on that day or that hour. Maybe you have to move it back a little. But we understand the frustration because remember, we want to close it as soon as we can too.
Right.
We're in the same boat.
And Chris, it also comes down to the communication that we've all been talking about, right? We don't necessarily tell people to schedule movers until we know that we've got a little bit more affirmative date. Because sometimes there's things that are out of our control.
All right, great call, Chris. We appreciate it. Again, out there buying and selling homes, communication makes everything work. Yeah, if you want to do scheduling, you got buyers and sellers. You got 2 title companies now. You might have a lender. There's moving companies. Good communication. How about the best communication will make your deal very smooth? All right, keep it here. We got another section coming up here, 248-539-9797. We'll be right back.
I got to
certain concerts now.
We are back. That's right, 9:49 here in Southeast Michigan. Man, is this summer flying by. I can't believe we actually had on Cass Lake last night. There was a fireworks show. And a lot of fireworks shows are still coming, Labor Day weekend and stuff. But sure enough, out there on the lakes, they had some fireworks last night.
You know who doesn't like fireworks shows?
Dogs and cats?
Dogs, yeah. Dogs.
Yeah.
They hate them.
My dog, honestly, I won't go there. My dog doesn't care.
Your
She's
dog
so
is
chill.
Your dog is crazy.
Yeah.
Your dog is not chill.
No, she is.
If you've
she's
ever seen
aggressive.
the radio show on Zoom or the podcast on Zoom and Harry's at home, that dog can come flying behind him and go right through the window.
She's on fire all the time. She's on fire, and she's a great girl, and we rescued her, and I love her, and she does not get dissuaded by fireworks, John.
So, Nancy, we had a lady on from Jersey doing our podcast, a real estate agent on the East Coast. I mean, she's busy. She's a top agent. And she talked a little bit about families' wants and needs. And since the pandemic, but she still said families are working at home, so location hasn't mattered as much. Are you finding that, again, the low inventory out there, families have these 5 different boxes I need to check. Are you finding that 6th box maybe is, hey, I don't need to necessarily be in that city I originally started at?
Yes, they are definitely expanding their search areas because there isn't that much inventory. The other thing is, and I hesitate to say, a lot of times, the school district isn't even mattering that much anymore because they can send their kids to a private school. And so there's a lot of things that are changing, and they're giving on a lot of, parameters or criteria that they had originally were very strict on.
Right. That's interesting. School district usually used to be that location because of the school districts.
Yeah.
Sometimes that's the number one box to check, Harry, but not always in everyone's situation.
Well, and proximity to work, and what she said, and we'll give out her name, Sarit Harrell team at Keller Williams. She's in Millburn, New Jersey, and we brought her on because we wanted to get a different perspective. She's on the train line, and it's really a suburb of New York City. She's 25 miles west of New York City. And what does that mean? We have people that live in Brighton that used to go ahead and drive downtown every single day, downtown Detroit. When the pandemic came, people said they can really work from anywhere. There are still companies that have hybrid models out there that allow you to work a couple days at home. So what basically she said, what you're saying is, Nancy, maybe it doesn't matter that much because you could always, you got to live where you want to live, and it might not be in proximity to work. And the school district, like you said, if you're working from home, maybe you can drive your kid to a different school. Maybe even in our area, there are open school districts where you can drive your kid, and if you're working from home, maybe it'll make it a little easier on you to where you could take that kid to the school of choice, it's called. So a lot of factors have come in play, and now with a lack of inventory, you can't be that picky anymore.
Yeah, that's true. And with the construction going on, everyone needs a plane. So I think.
Or how about a helicopter?
Yeah, helicopter would be great.
Wouldn't that be cool to take a helicopter to work?
When is 696 supposed to be done? I know I'm supposed
Never?
to know that with the traffic updates, but when is that supposed to be done?
Yeah.
Because that makes getting over to
Actually,
I got my
24.
2024. I got my Michigan State Spartans coming up, and that's going to make it hard to get from Royal Oak to East Lansing.
There's your plane.
I think they're playing down at Ford Field, though. There is a rumor that you might have some games down there. There you go.
Yeah,
we solved your problem.
We do
Isn't
have one
day
for
after Thanksgiving?
Day after Thanksgiving, Penn State.
That'd be great.
And Nancy, we started the program off with sort of what we were talking about in the hallway is setting some unreasonable prices. Again, really getting down with your professional real estate agent, decide who you're going to deal with, and listen to them. Again, it's a lot harder to come down on the price. Overpriced home can linger on the market. And then what it does is raises a lot of questions with some of the buyers out there saying, well, wait a minute here. This has been on the
What's
market
wrong
for
with
2
this
months.
house?
Yeah, maybe something's wrong with it. So different strategies out there, whether or not you're able to get that listing or you just don't see eye to eye. But somewhere in between what your agent's saying and what your hard head you think is, somewhere in between there's the real truth.
Somewhere in between is the real truth. But the strategy that I like to, and the best way that I can try to explain this is how do you catch a falling ball? You got to get under it. So you don't necessarily want to, keep dropping your price, trying to, see where that ball is going to land. You really want to start at the bottom and watch how high it goes.
All righty. Hey, we got a few minutes left here. If you want to join the show, 248-539-9797. Be sure to catch us if you don't get us on the radio today. Definitely call us at Capital Mortgage Funding all week long. We're there to help you. Again, we're meeting families a lot more in person now. A lot of family members, fathers and mothers and aunts and uncles are telling people, hey, go over to Capital. They've been around a long time. And again, there's no obligation at all to sit down with some true professionals and really see what you can do to set yourself up for a successful home ownership.
Right. And I really want to go back to what Chris had said as well with, trying to meet expectations on closing dates and everything like that. We are always going to try to meet the expectations of the closing date. But to our defense, the realtors don't always consult with us with what date they're going to put on the purchase agreement. You know, I'm waiting on numbers for a closing on Tuesday that the buyers wanted to have yesterday so that they could review the numbers over the weekend. And what am I waiting on? We've been clear to close for 10 days. I'm waiting on the seller's numbers. I'm waiting on the prorated taxes to come from the seller's title company, the sellers to get their payoff. So, you know, it's not always as smooth as we like it to be. You know, I would say 7 out of 10 times it's as smooth as anything. But those extra 3 times, it's not always going to be, you know, a cakewalk.
Well, you brought it up, John. Look, hey, look, there's a million new title companies out there. Everyone wants a piece of the pie. Hey, title's really easy. It's not. The hardworking people in Southeast Michigan here, these title companies, they'll tell you otherwise. There's some work involved.
But it goes both ways, doesn't it? How many times we schedule a closing for on the 1st and then they move it back to the 7th?
Oh, yeah.
All right, it happens both ways. So that's why I don't really get crazy about it anymore, because it's going to happen. This is the business. It's the industry. Right. If things are going to happen, it's going to happen in our industry.
And the moving companies want business too, so they'll adjust.
Everybody is in the same business.
And it always ends up working out.
Doesn't it?
Hey, good loans always close, right, Harv?
Oh, yeah, for sure. And here we've got some other information to share out there with buyers as we're only up against the end of the show here. MSHDA, Michigan State Housing Development Authority, did announce that they did increase their interest rates.
They did.
As the Fed has increased their interest rates, they did increase. If you want the down payment assistance of $10,000 and you qualify, hey, anyone listening out there, you can get that money. Not too many the criteria is not too hard to get that money, but they did raise the rate to 6.875. Now, that program also works if you don't want the money. You get the rate of 6.375. So the MSHDA program, you could do a MSHDA loan, get an interest rate that's almost 1% lower than what the marketplace has right now, John. Again, it could be an FHA purchase. It could be a conventional purchase. You just don't take the 10 grand.
You got to fit in the box that MSHDA puts out there.
Not too bad.
Right. But that's not for everybody. You got to fit in the box that MSHDA puts out there for you. And that's why you need a professional to tell you whether or not you qualify.
Well, there are income limitations on it, and that's what I want to get with Becky on when we talk about the city of Detroit. Are there income limitations on these things? And like John said, there are parameters that you have to fit into.
Credit score requirements.
Yeah, people aren't just going to give you money. They're not going to give you money without having to answer some questions.
Right. That's the old school. Their program is old school lending. Credit score requirements, DTI requirements. You know, it's not just run it through the computer, and if it gets approved, you can do it. You have to meet their DTI requirements.
Nancy, we've had some of the biggest October closing months ever, you know, and it always seems like October's busy. So I'm not going to say that things slow down here at the end of the summer, because they truly don't. There's a whole new group of buyers that all of a sudden come out because they think those other buyers are going to not be out there.
The double income, no kid buyers.
Oh, they love buying
My
right
favorite.
now. Yeah, right now, end of August, September, they're definitely looking.
They are. And, you know, historically, prices do fall a little bit in the fall, but not so much that it's really anybody notices.
I think they just table off. They don't fall. They table off.
Yeah.
Right?
You know, I mean, from like maybe spring, or, you know, it's like 0.2% maybe, you know, like it's not that much. But yeah, it's a whole different group of buyers. It's the, like I said, the double income, no kids buyers that are, you know, dominating the fall market usually.
All right. Again, we have a few minutes left if you want to sneak on. 248-539-9797. Be sure to call us at Capital. I'm looking at Dustin like, Dust, are we ended here? Or are you going to? No, we can keep going. All right. Look, be sure to call Capital Mortgage Funding. Look, we were talking about the MSHDA program. Yes, $224,500. There's a maximum set price for that. Again, FHA limits are up into the over $400,000 now. So if you got some lower credit scores and you didn't think, again, you might have had a foreclosure in the past or a bankruptcy, be sure to give us a phone call. We've got programs for almost every situation. And we don't want to call it non-conforming, but there are some subprime style loans back out there for self-employed people, John. There's 12-month bank statement programs. There's 1099 statement programs. There are some really niche programs out there. Usually there's a program, but don't call us at the last minute. Those you got to be pre-approved for and have all your ducks in a row so you can make that offer.
Yeah, you want to run those through the underwriting before you've even found the house to make sure you qualify, because they are going to dig into all those bank statements and dig into those 1099s and everything that you've got just to make sure. So get pre-approved, get it completely underwritten before you go out looking for a home.
All righty, that's going to probably wrap it up here for the Hardcore Mortgage Real Estate and Business Show. I want to thank anyone who called in. Chris did call in from the Port Huron area. And again, it's all about timing and communication. Definitely want to thank Nancy Warson. Of course, you can find Nancy over at the Real Estate One office on Orchard Lake Road out there in West Bloomfield. She handles all the lakes area and, of course, the whole Tri-County area. Deal with real professionals in today's market. You got any last words, Harry?
I'm good with it. I want everybody to have a great weekend. Be safe out there, everybody.
All righty. We got Pat Caputo coming up with sports. Keep it here on 97.1 The Ticket. We will see you next Saturday.